See, in holding company account, we have discussed all the types of problem, whatever is there in our syllabus. So now we have to go through few more problems which are similar in nature. So that we have to see. So now let us discuss problem number 10. The balance sheet of A and B Limited as on 31st March 2015 were as follows. So now if you see the asset side, there is fixed asset, stock and debtor is given. Stock and debtor, current asset, both the company is given. 6% debenture. If you see 6% debenture in B Limited at R is mentioned, that is by A Limited. So here you can say that A Limited is the holding company. A Limited is the holding company and B Limited is the subsidiary company. So here you see A Limited makes the investment in B Limited in the form of debenture. That is why it is given in the asset side. 6% debenture in B Limited at par value 90,000. If you see the liability side of the debenture, that is of B Limited. B Limited is a subsidiary company, that is liability side debenture is 1,50,000, asset side debenture is 90,000. So here by seeing these two information you have to be clear of one thing, that is it is intercompany transaction. See this here, intercompany transaction. Why? Because one company is making the investment in the form of debenture in another company. So it is one kind of intercompany debt. So what happens here? What is the intercompany value we have to see? So intercompany value here 90,000. 90,000 is the intercompany value. So while preparing the intercompany debt working note, you have to deduct 90,000 from both the side. That is from asset side investment in the form of debenture in the subsidiary company, and in the liability side that is whatever the debenture value, from that you have to deduct 90,000. Next, if you see, there is 1,500 shares in B Limited at 80 per share. Okay, so this is investment made by A company, A Limited, that is holding company in subsidiary company. The value given, that is cost of investment given, is 1,20,000. Since the paid up value is 80, if you see the face value of the equity share is 100, here only 80 is paid. So what you can here identify is first number of shares available in subsidiary company. Number of shares available in subsidiary company is 2 lakh. 2 lakh divided by 100 if you do, you will get number of shares. That is nothing but 2000. 2000 is the amount you are going to get. After that, from 2000, 1500 share is acquired by A company. So A is a holding company. So 1500 is a majority. Remaining 500 becomes minority. So that is about investment in the form of share. Before that, it was given investment in the form of debenture. Yes. Then cash at bank is given. That is both the side A and B company value is given. Then profit and loss account debit balance is there. In this problem, debit balance of profit and loss account, that too of subsidiary company B Limited. So how to find out that whether B is a subsidiary company or holding company? So you can see here investment made by the holding company, that is more than 50% of the share capital in the subsidiary company, means A becomes holding company. Of course, the other company will become subsidiary company. Usually, profit and loss account information will be given in the liability side. Liability side, there you will get credit balance of profit and loss account of subsidiary company. But in this problem, they have given asset side balance subsidiary company profit and loss account. So asset side balance means it's a loss. It is a loss to the company. That is why it is given in the asset side, and it is a debit balance. P&L debit balance. And if you see the liability side, equity share capital information is there as usual for both the company. General reserve of only one company is given, another company is not there. So subsidiary company general reserve we don't know. So while preparing the working note also, we can consider that information as nil. Why? Because for working note calculation, we want subsidiary company information. In this problem, it is not given, so nil. Profit and loss account of holding is given 80,000. Subsidiary is nil. If you see here, it is nil. But in the asset side, they have given 1,50,000. So there is a balance, but there is negative balance in the subsidiary company B. Then trade creditor, combined trade creditor is given 75,000 and 67,500, and total of the balance sheet is 9,55,000 and 4,17,500. Yes, after seeing this information, whatever the information given in the balance sheet, now we have to see the adjustment. So we have solved this type of problem before earlier. See this: A Limited acquired the shares of B Limited on 1st August 2014. So here A is a holding company, B is a subsidiary company. A Limited acquires the share somewhere in between the year, that is somewhere in the middle of the year, that is 1st August 2014. So you know, here financial year starts from April and ends on 31st March. So acquisition date here 1st August 2014 means what is a pre-acquisition period? How many months is a pre-acquisition period? That we have to determine. So your pre-acquisition period is April, May, June, July. 4 months. 4 months is a pre-acquisition period. Then what is the post-acquisition period? Post-acquisition period is the remaining months. That is August, September, October, November, December, January, February, March. So 8 months is post-acquisition and 4 months is pre-acquisition. So now this is very clear. After this, P&L of B Limited was showing a debit balance of rupees 2,25,000 on 1st August 2014. So now here debit balance at the beginning. So there was a loss at the beginning of the year in subsidiary company, and at the end of the year also there is a loss. See this balance sheet is given at the end of the financial year 31st March 2015. In that closing balance sheet also there is a loss amount 1,50,000. Beginning of the year, that is from 1st April till 1st August, the date of acquisition, the balance is 2,25,000. That is also debit balance. So negative balance is there beginning as well as the end of the year. So now you can identify here one thing: beginning of the year loss is more. Beginning of the year loss is more, that is 2,25,000. Eventually as the year progresses, loss gets reducing. Now loss amount is less. At the end of the year, if you see, loss is 1,50,000. Although there is a loss, you can say the company saved certain things, so you can treat that as a profit to the company. So now we have to determine one working note, that is calculation of current year profit or loss. That it is necessary in this problem. Why? Because acquisition date is somewhere in the middle of the year. So one additional working note you have to do. Then during the year June, that is April, May, June, that is third month, goods costing 9,000 were destroyed, against which insurer paid only 3,000. So you know, there was agreement between the insurance company and this subsidiary company. So what happens here? 9,000 worth goods were destroyed, only 3,000 paid by the insurer, means insurer compensates only 3,000 amount. So remaining still there is a loss, that is 9,000 minus 3,000. If you do, the remaining loss is not compensated by the insurance company. That we have to determine. That is easy. 9,000 minus 3,000, you will get 6,000. Then trade creditor of B Limited includes 30,000 for the goods supplied by A Limited. So creditor of B is a subsidiary company. So it includes goods supplied by the holding company. So one way it is an intercompany transaction. So whenever it is an intercompany transaction, it affects both the sides, creditor as well as the debtor. So you have to deduct 30,000 from credit side as well as from debit side. Then on that 30,000 amount, there is 3,000 profit it seems. A Limited made a profit. So here who is making the profit? Holding company is making the profit. For 30,000, 3,000 is a profit means now we want unsold goods. We want unsold goods. In this problem, if you see, unsold goods is how much? They have given half of the goods were still in stock at the end of the financial year. That is nothing but 31st March 2015. So here goods they are talking about 30,000. 30,000 into half, that is 1 by 2. So now remaining goods which is still in stock at the end of financial year is 15,000. 30,000 divided by 1 by 2. Now that is divided by 2. Now for that 15,000 we have to calculate unrealized profit. So here no percentage is given. In this problem no percentage is given. So what you can do, you can use the other information whatever is available. See this 30,000, 3,000 profit for 15,000 how much? Cross multiplication if you do, you will get unrealized profit. Yes, all these adjustment you have to do, then you have to prepare consolidated balance sheet. Yes, so now we'll see the solution part now. Before that, one note is given for better understanding. There is a net loss of 6,000. Why? Because goods destroyed and company paid only 3,000. So there was a loss of 6,000. This loss need to be adjusted while calculating current year profit. That means what? This loss you have to consider for current year profit. That means while calculating current year profit, if there was no loss, what was our profit? That we have to determine. So that we have to see now working note. Working note, first one, calculation of pre-acquisition and post-acquisition profit. Under that first thing you have to determine is current year profit or loss. So in this problem, loss is there at the beginning as well as at the end. So loss at the beginning. From where this information you are going to get, that we have to see here. Loss at the beginning is given in the adjustment 2,25,000. Although date is 1st August, we can say that this is a pre-acquisition loss. Why? Because acquisition happens only on 1 August 2014. That means what? Before everything is pre. Yes. So now loss at the beginning of the year is 2,25,000. Let's loss at the end of the year. End of the year loss where it is given. So now we have to see the question. If you see the question, debit side loss balance subsidiary company B Limited is given, that is 1,50,000. So this is loss at the end of the year. So this information you have to deduct from loss at the beginning in order to determine what is the profit made by the company. So profit for the year is 2,25,000 minus 1,50,000 is 75,000. So to this profit, as we discussed in the note, we have to consider loss of stock destroyed by fire. That is 9,000 minus 3,000, 6,000. We have to add. Why? Because we want current year profit when there is no loss of goods destroyed by fire. So that is why here current year profit total 75,000 plus 6,000 is 81,000. Once you get the current year profit, after that you can determine pre-acquisition profit or pre-acquisition loss you can determine. Then similarly you can also determine whether there is a post-acquisition profit or post-acquisition loss. So now we will see this. First thing we have to see now whether there is a pre-acquisition profit or not. So for pre-acquisition profit, as it is given in the question, it is given in the adjustment. Loss at the beginning we know 2,25,000. To that add one more loss, that is loss due to the stock destroyed 6,000. So now total loss amount, that is total negative balance, is 2,25,000 plus 6,000, 2,31,000 negative. Okay. To this you have to add 4 months current year profit. Current year profit is given, that is we have calculated 81,000. On this 81,000, 4 months. Why 4 months? Because acquisition month is August. That is why April, May, June, July, 4 months pre-acquisition. That is why 4 by 12. So now 81,000 into 4 by 12 if you do, you will get current year profit as 27,000. Why I have written here negative symbol? Because here negative balance, that is loss balance is more. Loss balance is more, positive balance is less. That is why I have taken negative symbol for profit. So you can easily determine pre-acquisition loss here. Here there is no pre-acquisition profit. Why? Because negative balance 2,31,000 is more than the positive balance 27,000. That is why now pre-acquisition loss, this balance is negative 2,04,000. Now we can find out this one. Yes. After this, post-acquisition profit or loss. Once we got the pre-acquisition profit, next thing we have to do is post-acquisition profit directly from current year profit. Current year profit information is 81,000. 81,000 into remaining months. That is 8 by 12, August to March. So that is nothing but 54,000. This is a positive balance because it is a current year profit and there is no loss. Yes. So now we calculated first working note, that is pre-acquisition profit and post-acquisition profit. Second working note we have to do here majority minority ratio. What about reserve? Reserve, there is no working note in this problem because reserves of the subsidiary company is not given. That is why we don't know what is a pre-acquisition reserve and we don't know what is a post-acquisition reserve. That is why no need of doing reserve working note. Next, directly we will move on to calculation of majority minority ratio. First thing, share capital of subsidiary. Share capital of subsidiary, if you see the problem, that is 2 lakh. 2 lakh B company capital. Number of shares we want divided by 100, you will get number of shares as 2,000. Yes, 2,000. Out of this 2,000, investment made by holding 1,500. So 1,500 is equal to majority. Yes. So remaining is minority. 2,000 minus 1,500, that is remaining 500 is minority. We want a ratio. Majority minority ratio. 1,500 is to 500. Simplify this, you will get the ratio as 3:1. So there are 4 unit 3 plus 1. So majority fraction 3 by 4, minority fraction 1 by 4. So now you can easily calculate after knowing the fraction, calculation of minority interest. So in this problem, minority interest calculation, usually what we were doing, that is capital of subsidiary, total profit of the subsidiary, total reserve of the subsidiary. In this problem there is no total reserve, only two information. See this, 1 by 4 share in share capital of subsidiary. Share capital of subsidiary 2 lakh into 1 by 4, if you do, you will get 50,000. Next, there is no profit, here there is a loss. That is why you have to deduct this information. If there is a profit, we added the profit in the previous problem. See this, shareholders fund, capital, reserve, P&L, everything shareholder fund. But in this problem there is a loss. That to loss, which balance you have to take here? Total loss. Loss at the end of the year. Loss at the end of the year. What is the loss balance? That is P&L account loss, that is 1,50,000. That information you have to take. So 1,50,000 into 1,50,000 into 1 by 4. So loss amount is 37,500. So total minority interest here, 50,000 minus 37,500 is 12,500. This information you have to show as usual in the liability side of the balance sheet separately. Yes, this is working note number 3. After this, we have to calculate majority interest working note, that is calculation of majority interest. Here also we want all the information separately. So first thing, 3 by 4 share in share capital. Total share capital of subsidiary we know 2 lakh into 3 by 4. What is the amount? 1 lakh 50. This is nothing but paid up value. Paid up value 1 lakh 50 we know. What is the investment amount here? Once we will see the investment amount by seeing the question. Investment amount is 1 lakh 20. Paid up value is 1 lakh 50. Can you tell me whether there is a goodwill in this problem? Yes. Whether there is a goodwill or capital reserve in this problem? Can you tell me? Just by seeing these two information. Yes, answer whether there is a goodwill or capital reserve. Just tell me. Akamsha, Amrita, Anusha, Ashish, Disha, Kuchal, Nishant, Rajat, Shifali. Just tell me whether there is a goodwill or capital reserve. Investment 1 lakh 20, paid up value 1 lakh 50. Yes, you can give a guess. Please comment in the chat box. You have to answer. No answers? Why you are not answering? Can I know why you are not answering? Out of two options, you can choose one, right? Capital reserve or goodwill. You can just comment what is your opinion. Isn't it? Capital reserve or goodwill? Tell me. Yes, Kushal. Amrita. Akamsha. Anusha is saying capital reserve. Okay. What about others? Whether it is capital reserve or goodwill. See, I want answer. Why you are not answering? Tell me now. Amrita Ashish is saying capital reserve. See, answer is correct here. Capital reserve is the correct answer. Why? Because here actual balance available in subsidiary company is 1,50,000 and investment made by the holding company is 1,20,000 means here holding company is paying the lesser amount. Whenever holding company is paying the lesser amount, it is a profit to the holding company. That is why it is treated as a capital profit. If there is a loss, capital loss. If there is a profit, capital profit. And capital profit, you know, it is considered as capital reserve. If there is a capital loss, what you are going to consider? You are going to consider that as goodwill. Yes. So here in this problem, there is capital reserve. So we were discussing about majority interest working note. There we discussed about this first point. Next thing we have to see here whether there is a pre-acquisition profit or loss. Previous working note, once again we will see here previous working note. There we got a pre-acquisition loss. So again pre-acquisition loss means capital loss. Capital loss is equal to goodwill. So on 2,04,000 3 by 4. What is the share in the pre-acquisition loss? That is 1,53,000. Directly in front of that you can write goodwill. Next, there is no post acquisition. Yes, post acquisition reserve is not there. Pre acquisition reserve is not there. Next thing you have to determine is 3 by 4 share in post acquisition profit. Post acquisition profit we know 54,000 by the previous working note into 3 by 4. So your answer is 40,500. So this is after acquisition, short term. So revenue profit. So this is known as revenue profit. You have to consider this information for consolidated balance sheet. This is working note number 4. After this calculation of cost of control, working note number 5, cost of investment, we have already discussed this, 1,20,000. Paid up value is 1,50,000. See this. Here we got capital reserve. Why? Because holding company is paying less and it is a profit to the holding company. But we can show only one information, either capital reserve or goodwill. So sixth working note is necessary, that is set off of capital reserve against goodwill. So now let us see this capital reserve information. Here we got 30,000 and any other capital reserve information is there in the majority interest working note, no other information. So only one information, directly total capital reserve is 30,000 less total goodwill. From where we are going to get this total goodwill information? You have to see majority interest working note. Majority interest working note, pre-acquisition loss, we have written goodwill. So this 1,53,000 we have to consider here. Total goodwill. See this. From total capital reserve, that is negative balance, if you deduct a positive balance, you will get the positive balance answer. Why? Here positive balance answer is more. 1,53,000 positive balance, negative balance is 30,000. That is why your final answer net goodwill is 1,23,000 positive. That is sixth working. Yes. After this, there is elimination of intercompany dealings. So under that, we saw that adjustment. Once again, we will see that adjustment. Yes, see this. The trade creditor of B Limited included 30,000 for the goods supplied by A Limited. So here there is an intercompany transaction value 30,000. So this 30,000 you have to deduct from creditor as well as from debtor. So now first thing we have to do here, total creditor we want. Total creditor that is given in the balance sheet. Creditor of A Limited 75,000, creditor of B Limited 67,500, combined or total creditor is 1,42,500. From that you deduct intercompany, that is from the adjustment 30,000. You will get final creditor that you have to show in the consolidated balance sheet as 1,12,500. This is the final creditor. And if you see the asset side, same thing you have to do for debtor also. Debtor, combined debtor we want. Debtor of A 80,000, debtor of B 45,000, that is given in the balance sheet in the question. Total debtor, combined debtor is 1,25,000. From that less intercompany 30,000, you will get a final debtor. Final debtor 95,000 you have to show in the asset side of the consolidated balance sheet under debtor. That answer 95,000 answer. This is seventh working note. After this, there is one more intercompany adjustment, that is about debenture. If you see in this problem, there is two side debenture information is given. Usually only in the liability side debenture information we get, but in this problem asset side also there is a debenture. That too in the holding company column. That is why you can easily understand here there is intercompany debt. So debenture of A Limited, that is not given, that is nil. Debenture of A Limited is nil. So we'll see the question once again. We'll understand now. See this. Debenture of A Limited dash not given, nil. But debenture of B Limited is 1,50,000. So what is the total debenture now? 1,50,000. If you see asset side debenture, this is nothing but investment. Investment by A 90,000, investment by B is nil. So total investment in the form of debenture is 90,000. So now we got both the information total. Both the information total we got 1,50,000 and 90. So now next thing we have to deduct is intercompany. So why intercompany 90,000 we have chosen? Because this is the investment made by the holding company, and this negative balance, that is liability side balance, is more than the asset side balance. That is why you have to deduct this 90,000 from the both the side as a part of intercompany debt transaction. So what happens? Final balance now. Asset side no value itself, that is why 90,000 minus 90,000 nil asset side. So in the consolidated balance sheet, asset side there is no debenture, but liability side debenture comes at reduced value. Reduced value means before it was 1,50,000, now it is reduced by 90,000. Now total amount of the debenture is 60,000. That the information you have to show liability side. This is about working note 7, elimination of intercompany dealing. Next, treatment of unrealized profit. Last one working note, that is unrealized profit working note. So that you have to see here. See this. Once again, we'll see the adjustment. Trade creditor of B 30,000 for the goods supplied by A, on which A made a profit of 3,000. So 30,000 worth goods, profit is 3,000 we know. For unsold goods, what is the profit? Unsold goods, how to find out? 30,000, out of this 30,000, half is still in stock. So 30,000 into half, that we have already discussed, 15,000. So how much? Cross multiplication we have to do. So 15,000 into 3,000 divided by 30,000, if you do, you will get 1,500 as unrealized profit. So this unrealized profit must be deducted from stock in the asset side and from profit and loss account in the liability side. Now this is very clear. This is about all the working note of this problem. Now after understanding all the working note, we have to prepare one final consolidated balance sheet. So now we'll discuss about this consolidated balance sheet of A Limited and B Limited. So now you see asset side, now here we have written goodwill. Why? Because we got final answer after set off is net goodwill, that is positive answer. That is why we have taken this on the asset side as goodwill 1,23,000. What about fixed asset? It is given in the balance sheet and then there is no adjustment, just write the combined value. 4,50,000 of A Limited, 1,50,000 of B Limited, write combined information. Combined fixed asset is 6 lakh. What about stock? Stock also you have to do the same thing. Of A Limited given in the question 2 lakh, of B Limited 60,000 given in the question. Combined stock is 2 lakh 6,000. 2 lakh 6,000. Now from that what you have to do, there is unrealized profit. Unrealized profit you have to deduct. So what is the unrealized profit here? 1,500. So once again we have to see the stock amount now, because there may be a mistake in the stock amount. Where is stock given? See this. Stock is 1,40,000. For A Limited stock 1,40,000 and for B Limited stock it is 60,000 given in the balance sheet. So now what we have taken for consolidated balance sheet here? Consolidated balance sheet A Limited, there is a correction. A Limited I have written 2 lakh. This is again the typing error. So 1,40,000 instead of 2 lakh you have to write here 1,40,000. Make the correction in the notes. So now we got final stock, that is 1,40,000 plus 60,000, 2 lakh. From that 2 lakh deduct unrealized profit. Unrealized profit last working note 1,500. So final stock is 1,98,500. Yes. So this is about stock. Next, debtor. Asset side, one more information comes, that is about debtor. Debtor, if you see directly from intercompany dealing, you can write the amount. Intercompany dealing, where is intercompany dealing? See this. This amount directly you write 95,000. Or else you can write 1,25,000 total debtor from that intercompany. Like that also you can show. So now debtor, final answer 95,000. Cash at bank, it is given in the question 75 and 1,12,500. So total cash at bank is 87,500. Asset side information is over now. Now we have to see the liability side information. So now liability side, once again we have to see the question once again. We'll see the liability side information. There is equity share. Equity share, that too of A Limited we have to take, that's holding company. B Limited already set off. General reserve of only one company is given, so directly you can take this information. P&L account of A Limited we know, that is 80,000. B Limited we have to see. Majority interest working note we have to see. Debenture we have already adjusted, that is 1,50,000 minus 90. So remaining amount we have to write trade creditor combined amount. Then there is one more adjustment. So now we'll see the liability side. Liability side, first one share capital. Share capital equity shares of 100, that is 6 lakh. That too of holding company only. So here holding company share capital we have to consider. Subsidiary company share capital we should not consider for consolidated balance sheet. Next one, general reserve. General reserve only one information. A limited directly you can write that 2 lakh. Profit and loss account. If you see here, A limited is 80. B limited is not given in the question, but we have taken 40,500. From where this information came? So now you see majority interest working note. Once again, we'll see the majority interest working note. There we have written revenue profit. See this. 3 by 4 share in post acquisition profit. So this 40,500 is nothing but post acquisition profit of a majority. Majority means post acquisition profit of holding company in a subsidiary company. That is why it is written in D limited subsidiary company column. That is 40,500. From that you deduct unrealized profit because we know there is a two-way deduction 1,500. So total P and L here after all the deduction is 1,19,000. Then there is a debenture. Debenture I have already told intercompany debt there is a deduction. So final debenture is 60,000. Then total creditor or trade creditor, total creditor we know. Then there is a intercompany is there 30,000 that we deducted, or else you can see the working note intercompany. There we got final answer as 1,12,500. Then there is minority interest that we have already calculated. That is in the working note it is there 12,500. Final balance is 11,04,000 of this question. Yes. So